If you don't have any money to go out and invest, it doesn't matter what's going on in the markets. It doesn't matter if you found an amazing investment opportunity tomorrow. If the stock market glitched tomorrow and you could buy any stock you wanted for 90% off, but you have no money to invest because all of your money is going to pay off your credit card bills, well, that doesn't do you any good because now you don't have the money to actually take advantage of that opportunity. That's why the very first thing you gotta do is you gotta be financially prepared. More specifically, what that means is before you worry about even investing your money, what you gotta do is save $2,000. If you don't have $2,000 sitting in your bank, not there to go out and buy something, but there to protect you against an emergency. This is an extra $2,000 that you don't need to pay your bills. If you don't have $2,000 saved up, you are in what I call the danger zones, because right now, if you run into any little bit of an emergency, well, now you got to go into credit card debt to fix that emergency. And so you're living in this, what I call financial danger zone. So you got to go out and save $2,000 as fast as possible. And if you don't have $2,000 saved up, you got to stop eating at restaurants. You got to stop going on vacations. You got to stop buying the Gucci and the Louis Vuitton. Get yourself this $2,000 ASAP. After you do that, the second thing you got to do is I want you to pay off your credit card debts, your high interest debts. Again, you want to do this before you go out and start worrying about investing your money, because the average APR on credit card debt at the time of me recording this video is around 24%. But historically, the stock market has grown by around 10% a year on average over the last century. Now let's do a little bit of quick math. 24% is bigger than 10%, which means if you can pay off your credit card debt 1 year early, not only do you get a guaranteed rate of return, but it's even a higher rate of return than the average stock market return. If you go and invest your money into the stock market or anywhere, you might get a 10% return. Maybe you get a 20% return, but maybe you get a 2% return. Maybe you get a minus 5% return, because we know that market crashes happen. We know that recessions happen. We know that there are some years where the markets go down. Just because the markets have averaged 10% a year does not mean that it goes up every single year. In fact, what it looks like is kind of like this, where you have these jagged bumps. Over the long term, the market has gone up, but it goes up and down and up and down and up and down along the way. And so if you have these high interest debts, what I want you to do is not put your money into the markets right now. Use your money to pay off the high interest debts as fast as possible. Until you do these two things, you are in what I call the financial danger zone. And what I say is, when you have these two things not done, if you don't have $2,000, if you still have credit card debt, what I say is you got to cancel your Netflix subscription because you cannot afford it. Now you might say, well, Jaspreet, it's only $10 or $12 or $15 a month, or whatever it is. Well, it's not the $15 a month. It's the 2 hours a day you're spending binging Netflix when you should be learning, when you should be reading books, when you should be figuring out how you can earn some more money. Because right now, you got to save this $2,000 and pay off your credit card debt, because you can't even think about investing your money until you get out of these shackles, until you get out of the financial danger zone. Once you do these two things, the next part of being financially prepared is to systemize your money. That means have a system where every time you get paid, some of your money is being put aside to be invested, some of your money is being put aside to be saved, and then you spend whatever's left. See, the majority of people, the problem for the majority of people is they make money, they spend their money, right? You pay your rent, you pay your mortgage, you pay your car payment, you pay for your groceries, you pay for the Gucci, you pay for the Cancun. Maybe you even don't have all the fancy stuff, but then you spend all your money and then you have no money left over, and then you have no money to invest, you have no money to save. And so if you saw an amazing investment opportunity tomorrow, if the stock market glitched tomorrow and you could buy whatever investment you want at a huge discount, it doesn't do you any good because you have no money to invest. This is where I want you to start being smarter with your money, because you want to start preparing when times are okay. That way you can take advantage of big opportunities when times are not okay. And a simple way that you can do this is by following something like a 75, 15, 10 plan, which says from here on out, for every dollar that you earn, 75 cents is the maximum that you can spend. 15 cents is the minimum that you are putting aside to invest, or that you're investing. 10 cents is the minimum that you're saving. This way now you're always paying yourself first. And by paying yourself first, I mean building your wealth first, because this is where your wealth is built, your investment money. This is where your protection is built, your savings money. And I gotta clarify, this is not savings to buy a car or to buy a home. This is savings to protect you against an emergency. This is there to protect you. This is there to build your wealth. This is there to make you look rich, right? This is the money you spend on Gucci. This is the money you spend on your clothes. This is the money you spend on your car. This is the money you spend on your food. This is the money you spend. Most people are fake rich. That is, they have all the nice stuff, but they have no real assets. But if you have the Gucci, if you have a Rolex, if you're going on fancy vacations, but you don't have an investment portfolio, if you don't have any dividends, if you don't have any royalties, if you don't have any rental income, you are hustling the wrong way. You're showing off all this stuff, but you have no real wealth for yourself. And what I want you to do from here on out is I want you to make yourself rich first. You don't have to get all fancy and complicated. Just open 3 different bank accounts. Every time you get paid, put some money into your savings account, that way you don't spend it. Put some money into your investment account or automatically invest it, and then spend whatever is left. That's the difference between wealthy people and everybody else, is wealthy people spend what's left, everybody else spends their money and then they invest if there's any money left over, but no more, because now you're gonna be financially prepared. Now we can take advantage of investment opportunities, and so you can just invest your money. It depends on what your strategy is, but at least now you have money to invest. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.